Doc here from North America. Good morning, good afternoon, and good evening. And as you can see there's the Swiss this morning, or this afternoon, or this evening, however you want to look at it, or wherever you are on Earth. And it is just marching along on the upside there. Let's get our fact check spreadsheet going. They've gone and challenged the what do you call it, the range itself. We're back at the top end of the range. It's like, what? How did that happen? How are we back at that top end of the range there? And there it is right there. It's like, what? It's like, I guess as I always say, and it's the craziest thing, it's like we're best of the dirtiest shirts in the laundry. That's what it really comes down to. We are the best thing to own, which is very strange to me, but I've given up on worrying about it one way or the other. Not with this QE. We know, I guess we could say this is one thing I feel very comfortable with. We are moving towards the end. In baseball, we call it the later innings. We're coming towards the end of this crazy. It's a accumulation of, as I sip my tea here, it's an accumulation of really bad politics over the decades that have allowed it to get this far. And at the same time, we had one party in the United States that has been abusing it for, like a century, if not longer. Maybe even you could possibly trace some of the disaster back to the Civil War. Literally. You could literally trace that back. You look at the railroad transportation index of the Dow Jones Industrial Average, and you can see the speculation and then the Civil War combination, and they start to become professional politicians. Something that the United States really didn't start off as, a professional politician. And so with it, the economics gets entangled. And you can see the turn of the next century, 1913. We have this progressive president, Wilson, and he's frustrated that J.P. Morgan and Cornelius Vanderbilt and a few of the others invest in the economy and do more investing in the economy than the federal government itself, and they find that to be offensive. And they think that they can do it better as a government, a centralized planned system, than the population privately with their own money. And it just keeps on growing from there. Those 30, 40 years beforehand, the turn of the century, the creation of the Federal Reserve, and it goes on, and then you can see, I guess you could even go to the point where you could say, Rayburn, the congressman, I think it was from Texas, who was like the longest speaker in history, and how they control the economy, and they influence the marketplace, and how they're all jealous about the idea of them controlling things and not the government, and that is, you can see this whole growth of it all, and they hide. That's the thing, is that they do a really good job of hiding. You think that it's like, they think it's like two parties always involved, when in fact it's one. And the second party is playing a gentlemanly sport. In other words, not abusing the system as much as the other side is, to the point where it looks, okay, maybe that's what the people want. When in fact that's not what the people want. We don't want to see this inflation. We don't want to see the government creating debt. And it just goes on and on and on. And now we're at a point now where the whole world, let me say it this way. When I started off in the financial universe in the late 70s and the early 80s, Wall Street was terrified of the idea of losing credibility. In other words, they didn't want to see the government overspending, overlending, being irresponsible on any level. There was a concern. We wanted our brand, the American brand, to be clean, to be honest. And in the end result, they just got carried away because they had too much power. And the Republicans, Ronald Reagan came along after the big inflation explosion in the 70s. It started showing, especially what happened was the Civil War. Now I'm not talking about the 1860 Civil War. I'm talking about the Civil War in the Democrat Party, which is breaking out again right now. Got carried away, and they really, the Northern Democrats destroyed Jimmy Carter's administration. It wasn't the Republicans that did that. It was the Northern Democrats who took power and destroyed his administration, and the whole South, to a great extent, turned Republican in less than 4 years. People never talk about it. This is one of the only places you're going to hear about it. It's a fact. It's like saying, let's take a look at something on it. Like, let's look at the Swiss. It's like saying that the Swiss is trading at 93.04 offer with a 3 bid. The South went Republican out of nowhere. We had people that said they would never be a Republican, because of the Civil War. And the whole South starts flipping Republican, like in a matter of just a few years, because they destroyed a Georgia governor's administration. That was Jimmy Carter. He was the governor of Georgia. They destroyed his administration, and they tried to arrest people in his administration to get power. Ham Jordan, his chief of staff, and Bert Bell, the Secretary of Treasury, I believe he was. He was a renowned investment banker in Atlanta. And they destroyed him. They tried to arrest these people. And the South went Republican in a matter of just a couple of years. And we're seeing that right now. The country is going major Republicans, the tail end of this craziness. And I notice we're talking about currencies here. And we're watching some of the strangest things going on with the currencies. In other words, they stay inside ranges for like a year and a half, 2 years. They play the top part, they play the bottom part. I mean, it's manipulated on a level that has never been seen before. I mean, it was one thing for the Federal Reserve to do repos in night, and then do the opposite, or at the Fed window lend money for a certain period of time and then stop and then repossess those bonds and then put cash back out on the street again to the banks, and then vice versa. They would pull them back after a couple of months. But we've gotten to a point now where the whole planet is in debt. I mean, people, the borrowing in Europe is trading at minus. Trading at minus for not like 6 days or 6 weeks or 6 months. We're talking about now 13 years, going on 14 years. They're trading at minus. It's like, what? So I'm a fund. I'm going to buy your government bond because I want to put some cash to the side and I want to be conservative. And I buy the bond from your government treasury. And now you're telling me I have to pay you, the government, interest to own that bond. This is insane. And so, here we are. I think we're coming towards the end of it. I really do. I think we're seeing the final end of this long, crazy adventure from a combination of 1860s, going to the 1870s, all the way into 1912. I really do. I think we're seeing finally the end of it, where free markets, free people will evolve again here in America. And with it, maybe it covers the world, since, we've led. I'd have to say that we, in the end result, the United States, should be responsible to some extent of all the debt that's been created. Somehow or another, they gave a head shake or a wink or, something that said, hey, don't worry about it, it's okay. Our Federal Reserve, we're the world reserve currency. We'll come in and we'll buy your euros, or we'll buy your your British pounds, or we'll buy your Swiss francs, or we'll buy your Aussies, Aussie dollar, or we'll buy your, kroners, we'll do all that. We can do that. No problem, don't worry. And I think that's where we're at the moment. And you can see when the U.S. Treasurer, like Mrs. Yellen now, and Mnuchin before her, would announce if someone is manipulating their forex, they're manipulating their currency. The central bank of that country, all of a sudden is manipulating their own currency. Well, yeah, that's why they're there, to try to keep things flattened out, to keep the economy more liquid, so that they can grow business and you know, create jobs, and so that's where I'm at this point in time. I think we're literally coming to the physical end of this crazy. So, hey AR, how you doing? I'm just on a rampage today because all I see this is Robin and I had a conversation a little while ago, and he goes, I just don't understand it. It's like someone's manipulating this particular product we were looking at. I said, Robin, I've been watching this now for like 13 years. It's like someone at the Federal Reserve opened up the John Murphy technical analysis book and is following it to a T. I mean, it looks like that to me. I remember I had traders, former chairmen of exchanges saying to me, Murr, you got to be crazy. You got to be wearing tinfoil on your head. In 2009 and 2010, when I told them that I see the Federal Reserve and they're manipulating the market, they were, nah, it can't be. It can't be. I said, I'm telling you, there's nobody else that has this ability to do that. What would you like to? You'd like to know about oil and euro? Let's take a look. Well, first of all, here is the euro, right there, and it dropped down again last night, and you can see it's tried to make a bottom in there. You see all the weakness we got going on right there. Let's jump over to right here. There we go. It's jumping up on J4X now. You can see the pressure's still on. You see we're at the low end of the range. We'll just take a little tightening of that. You can see that way down. So there we are. Euro is still leaking. We're not really seeing too much of a sign. I guess that's a nice little bounce so far. We'll see how that goes. I noticed that the bounces seem to occur in the mornings in the U.S. and by the time the afternoon comes along here and everybody's closed in the world, next thing you know, they sell it back down again. Let's see if that breaks the habit today. But right now you can see we are way down here. You see the white line way down here. You can see the same thing on the weekly, pressing down. Not much strength there. Let's see now, right, where's it at? Okay, let's go to the oil. There we go. Right there on J4X, and that's wrong one. Right there. You see, we went into the buy a couple days ago. It hasn't really gone anywhere particular. I heard the inventory numbers were kind of weak last night, but it's holding up. You can see right there. You can see that the weekly is still leaning down for a second week. They may just, they could literally just kind of follow this range here for a little bit, and then and this could literally also be the A, B, and this is the C. And there's a good chance if we can get this thing back into a weekly buy by the end of the week. Today's what? Wednesday? Is today Wednesday? Yeah. Today's Wednesday. It's Happy Hump Day. So, if they start to turn this up today, remember we have economic news on oil. So is it possible to buy euro at this moment? Well, let's see. I guess do something here to give you an opinion on buying the euro at this moment. I wouldn't. I mean, again, also, here's another question. AR, are you talking about like over the next 10 minutes being long, or being long for the next 2 days, or what's your time frame too? That's another thing. What time frame are you looking for? Hey, middle age. I could help myself. I bought March calls for a cheap $425. If we pop, I'll sell them. I hear you. You know how I feel about this whole thing. This is the where's it at? Let's put the euro back up there. You know, we're in a weekly sell. You know, we're in a daily sell for, I don't know, what is that, 6 days now? 3, this is the 6th day, right? Let's take a look at a fact check spreadsheet. Yeah, so there it is right there. We're five days in a sell. This is the 6th day. I myself, if it's an overnight trade, I would not be long. Now, since was it the Middle Ages using options, at least he knows what his risk is. So it's not that bad. You know, he can basically say, okay, I'm going to let it fall $100 or something like that, and then I'll get rid of it and not get stopped out. He has the control over that. He could turn it into a binary and sell the top of it. He could turn it into a butterfly. You know, he could do all kinds of things. So for the way that Middle Age did it, yes, I don't have much of a problem with that because we're at the low end of the range. And so, I mean, just a simple pop would help him. When it comes to buying the actual Forex at the moment, I always say what gets you in gets you out. That's an old floor expression. So in other words, if you whatever timing tool you're using on an intraday basis, if it says to get long at this moment in time, then yeah, definitely get long. But I wouldn't carry it overnight, and I would have a really tight. See, that's the problem when you're trading the spot. You know, your stops are going to squeeze you. It could break, go into the sell, turn around. You know, 2 hours from now, and start to lift up, as what I've suggested. So, you know, if you're going to buy it on a day-to-day basis, no, on spot. If you're going to buy it in the options, sure, you can take a risk. I mean, it's not much of a problem. You can manipulate that with not taking too much financial damage and turn it into a binary or do something of that nature. Does that make sense to everybody? So, let's see, I wanted to buy for 1 day the euro, but I'm not sure. Well, I wouldn't buy it for 1 day right now. Not unless you're doing it the way Middle Age is doing it, through the options or binaries. Because, you know, I mean, they could take it down again. I mean, we're in a very strange spot. Not counting, it looks like the Fed chairman is going to be removed. We'll know on Friday. So we have a lot of wild cross currents going on here right now. This is not exactly the time to be put into a position where you take as much risk like that. You know, doing it through binaries and options, no problem. Doing it through spot, lots of problem. You know, you could get knocked out of there in a heartbeat, and then you find yourself 5 hours later it's trading higher, and you go, oh man, I got stopped out. Does that make sense to everybody? Oh, I'll give you a second to think about it. And from there, I'm going to shift over to the cable. Did we look at oil? I think we looked at oil. Yeah, we did. Oil's news comes out in less than 3 hours. So oil's got to be a little tougher. What is my opinion on commodities? It seems like anything denominated in dollars seems to be a surrogate for currency at this point. So, I know you name a commodity and it's doing something pretty tenacious. You know, I look at oats. Oats is trading in the $7.50, $8 area. We had farmers trying to tell us that at $4 it was going to top out. I mean, you know, we just seen meal go from like 310 to 370. I mean, we're seeing lots of desperation, enormous desperation in the commodities arena on all levels. We talked about it yesterday about someone stepped up last week and bought the 250 strike in oil a year out. So commodities are like, you know, people are reaching for them because of the inflation. You know, commodities usually go up in value because of the inflation. Stocks go up because of inflation. And then when the inflation becomes overwhelming for an economy and recession starts, that's when they sell those things. So I hope that answers some of your question, because that's pretty much the only way we can really interpret it at this point, is that money is trying to run to safety. Wasn't it you that asked about where's safety yesterday? What's the safest place to run to, or what country, or something like that. I forget what the answer was to it at the moment. I probably said, the United States is a pretty good safe place to run to, and stocks are a good safe place. Bonds are like the last place I'll run to, and gold and silver, as much as it seems manipulated, seems to have an upwardly draft right now. Let me just show you gold and silver. Let's see, where is it? Right there. Okay, so yeah, that was the oil. And you can see this morning, gold, which went into a daily sell yesterday, is reaching right back up again, and that weekly buy is very firm for a third week. And then when you look at silver, which we identified as another reverse head and shoulders, which we're going to publish today, is doing the same thing. It went into the sell yesterday, and here they are. They're reaching back up again, and and trying to take it higher. I saw a headline, I think it was in Zero Hedge today, that said something like, are we ready to see $2,100 gold again? It looks like it's trying to go there. Yeah, they may drag their feet, and it may go on for like 6 months or 3 months or something like that before it gets to 2,100. Or maybe after the first of the year, maybe it'll start to rocket. There's a lot of speculation that this changing of Fed chairs is going to really disrupt the market. May not happen over the next couple of weeks, but it could happen over the next 2 months, at least in my opinion. There's about I understand that there's something like $7 billion a day that's being invested into the stock markets across the world, because they got to square their books at the end of the year, and they're undervalued. And so because they're undervalued, they're plowing in some crazy number like $7 billion a day to get their portfolios balanced. And then what? Everybody thinks like the Fed will do it again next year. Maybe not. So, Middle Age says, still waiting for 26 silver to book more profits and 1900 gold. I think you're going to get that 1900 gold. I really do. It looks like this reverse head and shoulders that we talked about yesterday, maybe the next tip-off of the next week and a half of starting going into that next action on the upside. AR says, because I keep in mind a portfolio with equities and some fixed income. Right. And there's a lot of funds that are undervalued, and they need to put the cash into the market. That's where I heard the numbers from. So in other words, if you look at the amount of money that has not been invested in the markets across all these public hedge funds and mutual funds and so forth, they came up with a number that's some crazy number. It's like, on average, $7 billion a day for the next 40 some odd days. And so that you can see it. The markets, whenever they sell off, they find a way to step right back there and buy them. I'm sure there's commodity funds out there trapped in the same way. As I was saying yesterday or the day before that, you can tell just the action in the commodities that it's not just being a surrogate of the dollar, but there's probably a lot that's been sold and there's no extra around, and they keep on reaching for them. At least that's the way I see it. I keep on seeing prices that shouldn't be there, that are firming things up, and it's like, wait a minute, where's that buyer from? Alrighty, let me have another sip of my tea, and then we'll go on. Let's see, where are we at? Oh, that was silver. So yeah, I'm seeing strength where strength should not be, which means it's controlled. Alright, let's see. Let's jump over to, where did we leave off currency-wise? Oh, cable. Let's see what the cable's doing. And there it is right there, the cable. Went into a daily buy, what was it, yesterday. Oh, where's that? Right there. We went to a daily buy right there. put that line back in there again. Day before was a volatility signal, red and green together. You can see we're going back above the that line we talked about, the 0.23 we've been watching. It vacillated up to the 0.38, fell back down below it. Now it's coming back up again. Looks like, excuse me, looks like it's trying to get some lift out of it. Notice the weekly is way down. We're on the third week now in a weekly sell. So it's really having a hard time getting going. If we can only get this to turn up and join with the daily, then we would start to see some strength and probably see the 136 or even as much as close to 137, 30 area. But right now we got a lot more work to do. They need to perk that thing up. You can see over here on the J4X, it's trying to turn up just like we're doing here on Chicago Quant. It's doing its best. It's lifting. See it right there. A couple days of green. So, there's really a push trying to go on in here. For instance, bean and coffee and soybean. Well, let's see. Soybeans, let's throw it up on, here's on J4X, soybeans. Soybean seems to be the laggard. I don't know if they're pairs trading it or what, but it seems to be the laggard out of it all. And I see a lot of beans in the fields around here. A lot of beans still. It hasn't been harvested, which is really surprising. They did that last year too. I noticed that they dragged them into December. And there is beans. And we're just trading in, it seems like we're locked around this 112 area. Or I'm sorry, 1200 or yeah, $12 area. And let's take a look at it over here. Where's that mouse at? Open. Right there. And coffee and soybean, yeah. The coffee too has been moving up. Let's see if we can find that also. There's soybean meal. Meal's taken off pretty well. We went to that daily buy 22 days ago now. Look at this thing. It just keeps on climbing. We've been in a weekly buy now for going on a third week. It doesn't seem to want to give up. And then, where do we go from there? Let's go to, what was the other one you did? Coffee. We have to open up another thing for coffee. What was I looking for? I knew I had an idea about something in there. Coffee, commodities. Oh, beans. Yeah, so that's the beans. Oh, that's the soybeans. Let's show you the soy itself. Right there, there's January beans. It's climbing into a weekly buy after, I guess, like 13 weeks in a sell. See that all there. And we're starting to put some strength into it. We've been in the daily buy, I guess a couple days back, really, right there. Right, yeah. So we've been in the daily buy since there. Ever since the agricultural report came out on the 9th, it's been showing more and more life out of it. And you can see the strength in it. Now we've got the weekly kicking up. And then you go across the board, you look at, like, there's deck corn. It's been in a weekly buy for like 8 or 9 weeks back in here. It keeps on climbing up. They're trying to put it into a sell today, but doing a very poor job at it. They're just, it just keeps on climbing. Same thing with the wheat. You can see the same thing. They're trying to do the same thing to it. It's been in a buy all the way back there since the last week of September. There's a lot of buying in the commodities, and again, like I said, they do use it as a surrogate. You can see here red wheat. There's the red wheat out of Minneapolis. Flirting today with the daily sell. Finally flirting with it, and I guess that should be moved over like that. And is that right? No, that's not right. Let's get rid of that. Where's it go? Remove that. There we go. And so you can see there, it's trying to flirt with it, and that should go up top. I guess that should be right there. There we are. And that's the red wheat. And that's for cakes and cookies and so forth. But the weekly is very strong. It's been in a weekly buy, since the end of September. So commodities are really reaching up. Oh, you can't see. I'm sorry about that. We'll do that again real quick. There's the red wheat. There is the corn. You see it right there. There's the beans. You see they're marching their way up, as I mentioned before. What was the other one? I was looking at, oh, the soy meal. Yeah, with the soybeans. There's the deck. There's a deck meal right there. Just all of it showing life. 22 days now, just roaring along. And then you can see here. Look at oats, December oats. Flirting with a sell today, but it's trading in the 730 area now. I mean, it's like it got even higher, and now it's been. I guess it never got to $8. Maybe it did. Let's see. Let's move over. Did it get to $8? No, it didn't get to $8. It got to 750 something or 770 something. 776. Got off a high. It's hanging between the $7 and $750 area. We had farmers that were subscribing to us that just kept on telling us over and over, not happening. Can't get there. Don't worry about it being past $4. It's going to die. Well, here we see it trading at 775, so it's almost doubled in price. Let's open up. Let's see. Where is that? Let's open up the. What am I looking for? Oh, I know what it is. Let's look at coffee. Right there. There we go. This will be coffee. And you can see it's at some type of all-time highs. Middle Age was trading that stuff. You can see here we went to a buy there. Let's grab one of these greens. I don't feel like making a new one. Right there? No. Right there. So it goes into buy there. Flirted with a weekly sell there. Let's grab one of these green ones here too. Went back into the weekly buy there. And it's going from 55 to 61. Is that live today? That's live today. Last trade 61.60. So, coffee's climbing also. And I guess we're coming into the summer months in South America, right? Yeah. So, I guess they have a good idea of what's blossoming and what's not at this point. As we take another sip of water. Yeah, and I guess that's what the pressure is from the meal too, right? I mean, we've been watching the soybean meal and the coffee. So soybeans here, we have it up on, where's it at? On J4X here. You see the strength there. It keeps on lifting. I don't know. They may be selling beans and buying everything else. That could be literally the whole strategy. Sometimes they pairs trade like that. Then imagine the desperation. Imagine how high it could go if they're forced to cover. But the real talk was soybean meal. So, all right. Where did we leave off in currencies? This has been one of those days where I'm just like, it's so high now. Yeah, I agree. I mean, well, I think I mentioned it yesterday. One of the economists that I follow throughout the decades is projecting some number like, what is it? 10% inflation by the end of next year. 10% inflation. Yeah. So that's going to be really high. You know what I mean? That is real high. 10%. We're at 6.2 now. So, when you try to think about where can it go, it could almost double. I heard somebody was driving from, where was it? Yesterday, I heard somebody say they were driving from Phoenix to somewhere, Colorado maybe. Right? So it's Phoenix, Arizona, up to Colorado. They're adjacent states. And they said that they filled up with $6 gallon gas. $6, yeah. I mean, no more than a year ago, a year ago, we were like 210 or $1.80 a gallon. I mean, it's doubled in price. Some places tripled in price. I hear stories that California's at all-time highs. You know, they have more crazier laws. They want to outlaw gasoline. So, I mean, we're just seeing all kinds of pressures from the politics. This is the gasp of the left here in the United States. This is their gasp. This is their last shot of power, and they're trying to jack everything they can because they know they're gone. They've been caught. They're red-handed at this point. It could be decades before they have power again. It could be real long. All right. Hey, let's take a quick look again at Euro. Look at it, it's doing nothing. Let me show it to you. Right there. Just doing nothing, sitting there. Bouncing between plus and minus. So, how do I look at for opportunities in markets? Or I follow my math. I mean, that's usually the best way. I mean, I'll look to see what might be noisy. In other words, what news is going to come out in a particular area, and then I use my math after they announce it. But best way to trade is to have the discipline always to follow what your decision-making process is. So whatever you're using to make a decision with, you know, practice it day after day after day, and use it day after day after day. And then there are times, like around here in the webinar, someone will mention something, we'll go look at it, because there's so many products out there, and you know, just you know, use that. Like, oh, you know, someone mentions something, we go look at it, see that there's an opportunity there, there's some type of opportunity coming up. And we put the math to it, and we go. And now I see you say, AR says math, question mark. Our indicator, you know, I call the indicator math. The indicators are your math. And then what you do is you practice with them, you back test with them. You explore the success and failures and the different characteristics of them. And that's usually that's the only way you can really trade in the end. If you're trading binaries and options, it's a lot more easier. If you're trading the spot, it's a very short period of intraday trading, and so forth. Does that make any sense? Okay, let's see now. Where else? Let's see what Turkish lira looks like today. Whoa! Another high today. To the moon, Alice. The dollar is now pierced the 10.5 area. I can't wait. I'm so excited. I'm not even going to go over to J4X real quick. I just want to go see what it's doing in the Turkish lira at the same time right there. And we'll throw that up on the J4X. In other words, I want to go to the meat and potatoes. And there is no doubt that Euro Turkish lira pairs trade is a very interesting pairs trade. Right there. That's the meat and potatoes. Looks like we are dashing our way to, let's see, have we hit the 12? We hit the 12 already. Yeah. There it is, 12.03. I don't know why I keep on thinking we're going to see 12.5, but wow, I'm just happy that we got to the 12. Because I'm not even putting any math to it at this point. It's just marching. AR says, see, hence, makes sense. Okay, good. It says, AR, is it better to be a specialist in some area when analyzing a market, or is it better to be more of a globalist? Now, that's an interesting point of view. I could see you being a specialist in a global point of view. So I see both of those words kind of matching together. You know, I think it's better to follow a few products and trade them well. I think that's probably like the best thing of all, you know. And then you have to have your mind clear to the idea of, are you intraday trading or you're trading overnight, on longer positions. Like Middle Age is in here right now. And Middle Age trades option binary type combinations or naked long calls on a year to year on month to month basis. So in other words, when Middle Age says he's buying euro calls, chances are they could be 3-month options, or 2-month options, something like that. When he's talking about owning bean meal, he's got March calls on. When he's doing gold, he could be talking about February or March options there. He's buying time. So when you're trading, you're trying to, there's intraday trading where you use the spot and you get in and out. You can do intraday trading with the options just as well. In the binaries, it's still possible to do that very comfortably. But the thing is that if you're going to carry a position, the logic is to do it through the derivative market, the option market itself. So you set up a binary or a call, and you buy that for days, weeks, and months. Much longer time period. If you're intraday trading, then what you're doing is you're using short-term tools, and you're working at getting it in and out of those tools, on an intraday basis. So it's a combination. And so, yeah, you can specialize on a global level with no problem. So it's not one or the other, it's both combined together. All right, wow, I'm kind of excited, look at that. Euro Turkish lira has banged the 12. I told you, we were looking and we thought this thing's going to climb up into that area. It was going to see the 12 and a half, and here we are. Yeah, I think I've really gotten a more comfortable attitude of what President / former Prime Minister Erdogan has done. He's devaluing the currency, possibly more for European reasons, not for domestic reasons. That may be the answer to it all. So in other words, I thought for a long while that he was devaluing the currency to get money to come in to Turkey and making it so undervalued that the money would come in. And now I'm starting to think that he's doing it more for trading opportunity with Europe, since things have gotten a little odd since there's been question marks put up about joining the European Union. So it could be just something as simple as that. Oh, what's that, Middle Age? Doc said something well. I tried. A broken clock is right twice a day. Middle Age, Let's see. A blind squirrel will find a nut, and sometimes I do. All right, let's check out the cable against the Swiss. Let's see what that looks like this morning. GBP, there's New Zealand right there. GBP yen right there. And GBP Aussie right there. Don't we have the Swiss? I thought we had the Swiss. I think we converted it to something. Which one should we convert? The yen or the GBP New Zealand? Let's do New Zealand. There we go. Just a quick look for the fun of it. Been a daily buy for 6 full days going on a 7th. But we've been in a weekly sell with this whole slide from the 196 area. 97 area? Yeah, 96 area. So it makes it awful tough. I mean, it made you cover here down at the lows of 88 and change, but nothing there. Now let's go back to GBP Swissy. Just had to say it because I saw it. Let's see, where's the mouse at? There it is right there. There we go. And we'll do the same thing there. All right. Let's see what we got going on here. So we've been in a weekly sell since, wow, that's a wacko, isn't it? let's move these around a little bit. So went into the buy there, but we went into the weekly sell here. So let's move that over. So it goes into the sell there. It still lifts. What do? We got a daily buy. Yeah, we got a daily buy and bang right into a sell, which is really interesting. So we went into the sell. We went into the buy there, and literally the following day goes into the sell there. We go down for a couple days, go back into a buy, cover, makes you cover it on, and so you're neutral for this move right here. And then you go into the sell right there. So let's grab that sell and move it over. So you go into the sell here, and you're in a sell all the way to, what is that? Is that a red and a green there? I think it is. Let's just widen that a little bit. I don't think it is. No, so it goes into the buy there. Come on, give me my buy. So it goes into buy there for a day after you catching this ride, which is one big chicken dinner from being short from 126, half area, I guess you could say, all the way down to the 123 area. It goes into a buy, and then it goes right back into the sell the next following day, right there. And it's a small winner chicken dinner, very small, because it barely goes down for the 2 days, and now we're back into the buy here. So, and actually it's starting to flirt with the weekly at the same time. So there's your GBP. Let's move this over just a little bit. This is the GBP Swiss over the last 3, 4, 5, 6, 7 weeks. So 6 weeks in a sell. It's had one fantastic trade. The other was just kind of sloppy. You know, went short here. Actually, that's not the short, is it? The short is right there. So the short is there, and it barely goes anywhere, and throws in daily buy right there, and so you're flat. But then it gives you all the money, that whole ride all the way down. So how's that? Let's see. Middle Age says, my trading strategy, the broken clock. I like that one. It's right twice a day. Where's the blind squirrel? I like the blind squirrel one also. It will find a nut. And so that's where we are. You can see that that's where we are with this product at the moment. It's trying to climb, and our weekly is coming up to the time manifold right there. Easy peasy. All right. What else we got going? Anybody want to see anything else? Where did we leave off? Oh yeah, Turkish lira. So we go to the Canadian. Let's see what the Canadian looks like. Canadian is bouncing around, still in that buy from here. Refuses, you know, gave us the green yesterday and lifted, and we are through the weekly. So they're putting the pressure on the Canadian at the moment. It's still climbing up, and you know, in a weekly buy for one full week, and trying to get back up to where it went into the buy. From there, we always zip over to the. Oh, you can't see that. Let me just show it to you. I think you could see some of it, didn't you? Yeah, right there, right there. Okay. Now let's go over to the cable, not the cable, the metals complex. So there's gold on J4X. Let's take a look at it here. I'm impressed with the way it's trying to climb. That's oats and dotes and little daisy daisies. Okay, and that's gold there this morning. No, that's silver. There is the gold, and it's lifting back up. You know, it's going back to the tops here. And you can see we're climbing. So whatever they did yesterday, everything rolled. You know, it was really strange. It was Bitcoin, all the cryptos got beat up. Gold and silver got beat up. They all got beat up. It was really odd. Very odd. Oh, yeah. Check this out on the Aussie dollar. Line 12, is it? Yeah. Second day in a buy. I think we're underneath though, aren't we? Let's go over and look at it. I think the Aussie is, the weekly is underneath, I think, at the moment. Yeah, see, that's what it's doing right now. We're underneath. And, oh, and look at that, we're pushing into the sell here today. So, I mean, you can't really take the buy because, the thing's been underneath the weekly sell all week long. And it's doing it here again now. Now this thing's breaking down. So the dollar, I mean, the Aussie against the dollar is going down. So that means that it's losing value, right? So in other words, the dollar is gaining value? I guess that's what it is, right? Yeah, the dollar is gaining value. We're getting, like I said, we are getting to a point now where, a lot of this very odd world investing is coming. I think we're really coming to a major change here in the next 6 months. I mean, a major change. And then over the next 12 months, it's going to be even more major, like historic level, like 1913. I'm talking about some major changes in the financial markets. I think we're coming towards that end. In 2 years from now, we may be looking back at the quantitative easing in a whole different way. Alibaba, yeah. Here's Alibaba. It's playing with the daily sell today. You can see that starting off. And we're in a weekly sell for 1 full week again, I guess it is. I'm not sure. I don't really look at it that closely, and I know that these numbers are messed up. Let's fix that. I put it on my spreadsheet, but I think it needs more work. So the white, let's do this. We'll go like this. The white should be the histogram, and then the 4 should be the line, right? That makes sense. And then we'll make that invisible. I think it's like that's the way we really look at it. So went into the buy here. Oop, done something wrong there, didn't we? Let's bring it back down again. How did we just blow that up? Properties, bottom. There we are. And let's move that up. I don't really look at it that much. No one asked for it. I put it up on the spreadsheet. So it went into the weekly buy here and went up, and then it pushed into the daily sell there. You can see that. And then you see it went back into the buy a little bit there, flirted back and forth, and we're in the buy. And then it breaks down, and now we are 2 weeks in a sell. This is the second week in a sell. Now it's been in a daily buy right there. You can see that it's been climbing from it on a daily, but I wouldn't take it. I'm thinking that it's going to roll over again and possibly head down here again. As you can see in past performance, it went into a weekly sell back in, what was that, July at the $180 area, and it traded down to the 140 area in that weekly sell before it went up. So that's Alibaba. And then you can see here, this could be literally end of year action, nothing more than that. But look at it, took it back up to the 180. That was kind of cool. Yeah, they did. They drove it back up to the 180. It went into a daily buy right there, so you couldn't be short for that explosion. And it took a couple more days for it to get into the weekly buy. Then when it finally went back into the daily sell right there, we were in a weekly buy. So the line was over the zero line there, so you couldn't be short now. And then for a couple days it went sloppily and gave you a volatility signal, and then it went into a buy right there. And then it went into a sell right there. But we're in a weekly buy, so you don't want to short it. You just don't want to be long it anymore either. And then they sold it down pretty hard during that daily sell. and then they go back into a buy right there, and you're in a weekly buy. You get squeezed there, don't you? Yeah, next day they put it into a sell. It really gets choppy in here, and it can't get into a buy. It's still in a sell, and a sell all the way to right there. So there's the lines to it, and the weekly buy is right there. So there's your whole game right there, and now it's in the weekly sell right there. But we are now coming into the end of the year, and I always try to warn traders, you know, funds are going to do window dressing and not make a lot of sense. So going into this end of this week, all the way for the next 5-6 weeks is going to be really sloppy. And our math is going to be all over the place. You know, you're going to have to be paying attention to all this stuff because, you know, funds are going to have to, they're incorporated and they have to follow their manifesto. If they don't follow their manifesto, they'll get sued. So they have to follow what they put in their incorporation, the manifesto of the incorporation. All right, traders, there it is. That was Alibaba. All right, this is Doc from North America. We will see and talk to you all tomorrow on Thursday, a day before Friday. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. Thank you, Dukascopy. Thank you, Chicago Quant. Thank you, world. Ta-ta for now.